All right, welcome everybody. My name is Kyle Magatelli. I am the Webinar and Social Media Coordinator for Student Doctor Network and Health Professional Student Association. And I'm very excited to be joined today by Julie Gilbert and Candace Pantor from the AAMC for our Financing Your Medical Education webinar. So thank you for joining us, guys. Very much appreciate it. Speaking only for myself here, at least, I'm applying next cycle, so I really need to know I need to know this information. It turns out medical school is really expensive. So anything and everything you guys can share with us, very happy to hear it. So thank you very much for joining with us and partnering with HIPSA to present this webinar.
Happy to be here. Thanks for having us.
Awesome. So can I give it a couple of moments to let everyone trickle in? And so today we have a lot of really good information. I'm especially excited to learn more about the financial assistance program, which if you guys qualify for it, you absolutely need to get signed up for the financial assistance program. This is a fantastic resource that is going to make your life so much easier. If nothing else, you get all of the AAMC MCAT prep material free, and that's like really nice. So that's enough out of me about that, though. I want to show you guys a quick video introducing the Student Doctor Network, and then we will get me the heck off screen so that we can get to the information everyone is here for. So I'm going to tee that up. Awesome. Okay, sorry about that. I still don't know how to use technology all that well, and I have multiple monitors, so I get easily distracted. And that's why I'm going to turn this over to Candace and Julie. All right, please take it away and save me from myself.
All right, I'm going to pull up my slides here, and we will dive right in to this topic that is near and dear to my heart. My name is Julie Gilbert. I am a senior education debt management specialist with the Association of American Medical Colleges. I'm going to go ahead and let Candace introduce herself as well, and then we will dive right into today's presentation.
Thanks, Julie. So, hi, everyone. My name is Candace Pantor. I'm the manager of admissions communications here at the AAMC. What that means is sort of any of the emails that you get, the website updates, our social media around AMCAS, the fee assistance program, MCAT, our preview exam. I am behind all of that and assisting our fellow people on services around those messaging. Happy to be here and share the information today.
Great. Thanks, Candace. So we are going to talk about how to finance your medical education and what options are actually going to be available for you for financing, and what resources can you use? What are the reliable and unbiased resources that you can use to get the information that you need when you need it, and to also know what questions to ask. I like to think that the AAMC FIRST program, which is the program that I primarily work with at the AAMC, is going to be your best resource. This is going to be where you can come for financial information, for resources, for different services, and for tools. Just to give you a quick overview of what's available when you come to our web pages, you are going to find first fact sheets. These are informational articles that are very short, usually 1 to 2 page articles. You're going to find some videos and some webinars. You can come down to our first resources, which are things that are print materials like publications and charts and infographics. If you want to search our materials, the easiest way to do that is going to the top right and use that first top blue button where it says search first. You can find our materials, especially if you're looking for a specific topic. You can also sign up for webinars. We have a new webinar coming out every single month. As you can see, the next webinar that we're offering is on Friday, and it's going to be all about credit. So if that is a topic that's of interest to you, I would encourage you to register for that. And below that, we also put up alerts. And these are things that you need to be aware of. For instance, what we have there right now is that there is a pause on interest accrual for student loans right now because of the CARES Act relief measures that are currently in place. So things like that will be mentioned there. So I do encourage you to take a look at our website. If you haven't been out here before, get used to it and look for some of the resources that can help you with the process of figuring out how to pay for medical school. Now, of course, with financial aid, before you even get there, you have to think about what comes before that. What comes before actually preparing and getting financial aid for medical school? And that comes down to the actual application cost. You know, there are fees for MCAT preparation. There's MCAT registration. If you choose to participate and purchase the medical school admissions requirements, which is a database that where you can compare requirements of different schools, that is a cost. There's the AMCAS application, which is your application to medical schools. There could be secondary application fees for some of the schools. You might be required to take the CASPER test, which is a situational judgment test. Or perhaps some of the schools are going to require you to take the AAMC preview professional readiness exam. There are a number of schools that are participating in that exam. Then there could be a possibility for you needing to travel to a school, maybe not necessarily for an interview right now, but maybe in the future, or maybe you need to go take a look at the school before you make a decision that you want to attend school there. And then, of course, with that comes the lodging and the food and the clothing for interviews. Then it comes down to deposits. And what about if you do want to take a second look at a certain campus? All of these things cost money. And unfortunately, all of these things are things that you are not able to use financial aid for. Most likely, you're an undergraduate student when you are thinking about these expenses. Some of you might have actually even graduated from your undergraduate program and you're taking a gap year. Of course, there's no financial aid in that respect because you're not enrolled in school at that point in time, even to cover these kinds of costs. So we really need to be mindful of the expense of these things moving forward so that you can prepare and plan for some of these expenses as you move forward. I like to show a sample of what these expenses could look like. And so I have a range of costs and then I have a sample cost. And my sample cost column shows you that if, I just took an average range. So like if I did the MCAT test prep bundle and if I registered for the MCAT exam and I took a 2-year subscription for MSAR and I applied to 20 schools and I had 20 schools that had a $60 application fee for my secondary application. And let's say 8 schools required me to do the CASPER test, but only 1 school did I have to do the preview. And I did spend about $1,000 on interviews. What does that look like? Well, if you total all that up, it comes to $4,032. And again, if you're not planning for that, that can be quite an expense. But let's say we're a year out from applying. Well, if you can break that down into 12 monthly payments and set that money aside, that might make these costs a little bit more manageable. Now, I have some really good news for you, and Candace is going to go over that really good news because the AAMC does have a program to help lift some of these costs if you're eligible. So I'm going to turn that over to Candace to talk about.
Thanks, Julie. So as Julie just went over, there is a financial component to the application process. And here at the AAMC, we firmly believe that the cost of applying to medical school shouldn't deter anyone from becoming a doctor. So like Julie mentioned, we have our fee assistance program. And this program assists those who, without this financial assistance, would be unable to take the MCAT, apply to medical school with the MCAS application, or use some more of our AAMC resources. So if you're approved for fee assistance, you received reduced MCAT registration fees. So as you saw on the previous slide there, the MCAT registration is currently $330. If you're approved for fee assistance, it's reduced to $135. You receive the MCAT preparation products, which is the official prep online only bundle. You also get complimentary access to the medical school admissions requirements database, and that's for 2 years. Included in the fee assistance program, there's also a waiver for AMCAS fees for one application submission, and it covers up to 20 medical school designations. And I also want to mention here that for those that are approved for fee assistance, many medical schools also waive their secondary application fees for those who qualify. We also have a waiver for our AAMC Preview Professional Readiness Exam registration fees, and that's completely covered as part of the benefit. So it's the $100 registration fee is waived. And I also want to note that if you are applying for testing accommodations for the MCAT exam, you have access to a stipend towards an evaluation if it's required to support your MCAT accommodations application as part of the benefits. Now, benefits are not retroactive, so in order for you to use the benefits, you must apply and receive them before you register for the MCAT or submit your AMCAS application. And also, since the prep products are involved, the best time to actually apply to fee assistance is going to be before you study for the MCAT exam. So that way you're able to use the whole gamut of the products that you get. And if you do use the fee assistance benefits, all of them, and if you're awarded and you received all of them, you can save over $2,000. Now, for the eligibility requirements for the program, there's two main eligibility requirements. One is that you have a US-based home address, and the second is actually tied to the income, their income guidelines, and it's tied to the U.S. Department of Health and Human Services poverty level guidelines. And I'll go into a little bit more detail about this on the next slide. Then also parental financial information and their supporting tax documentation is required if you're under age 26, but parental information is viewed independently from your applicant information, but it must fall within the same eligibility guidelines. So here is a chart of the income eligibility guidelines for our current program year, so the 2022 program year. So you will be granted fee assistance benefits if each household that you report on your application has a 2021, so we use the previous year's income information, that is 400% or less than the 2021 national poverty level for that family size. And you can see those figures here on this chart, and we also have this on our website. And again, parental information is viewed independently from your applicant data, but it must fall within the same eligibility guidelines for you to qualify for the program. Now, the application typically opens in late January or beginning of February, and it closes in December. So the 2022 program will be closing on December 9th. And to be eligible, you need to complete and submit an application, and I'll go into the application details a little bit on the next slide. So once you submit your application, the system does do an automatic review and will provide you with the next steps on how to upload your required documentation that you need to complete your application. Then once your documentation is submitted, the FAP team, the Fee Assistance Program team, does a review to confirm your financial details. And once we receive your completed application and all of your supported documentation, you'll hear back from the team with a decision within 10 business days. So here is a look of the different sections to the application. So you will enter some information about yourself and your financial information. Then if you are under age 26, you're going to enter your parental information and their financial information. Then finally, you'll review an application summary and you'll certify and submit your application to us. So applicants are often confused, and one of the main reason we get questions is about the supporting documentation. So here on this slide, you can see the supporting documentation that's needed for the income eligibility. We do accept letters in lieu of these official documentations that you can see here. So for example, if you have foreign income or say your parents are working abroad, we do accept a foreign income letter. We accept housing and food assistance letters and gift and support letters in lieu of these official documentation and to verify your income. Also, if you haven't received a W-2 or a 1099 form, we do accept letters from your employer that just states the amount of income that was earned in the previous year. And that information just does need to be on a company letterhead, and we need a signature on that documentation too. Next slide, please. Now, the other requirement is that all applicants must provide proof of a US-based home address. And you can see the documentation and the forms of ID that we accept as proof of US-based address here on this slide. There's a couple things to note about the documentation or your ID before you submit. So your full name must be included on the documentation or the ID along with what your current US-based address is. If you are submitting an ID, it must be unexpired. And if you're submitting documentation such as a utility bill or the telephone bill, it must be issued within the last 60 days of when you have submitted your application. And if you're unsure of any documents that's needed, the team is there to support you. So they do send you detailed information about what to submit. And you can also reach out to our services contact center if you have any questions about submitting your application. And I'll go over their contact information on the next slide, please, Julie. So if you do need any help completing the Fee Assistance Program application, like I mentioned, our Services Contact Center is the resource for you. They are available Monday through Friday from 9 a.m. to 7 p.m. You can call the number here on this screen or email at what you see here on this slide. Now, you will visit our website at aamc.org/FAP to start your application. And I also want to encourage you all to check out the Fee Assistance Program Essentials that actually has more detail about how to complete the application and more detail around the program. So thank you very much, and I'll pass it back over to Julie, and I'm looking forward to answering any questions you have about the Fee Assistance Program.
Thanks, Candace. So let's jump back into looking at the actual cost of a medical education. Now, I like to bring this up because this shows people what it actually looks like for a specific class. And the most recent data that we have is for the class of 2021. The class of 2022 information will be coming out actually within the next week. But what this shows us is a number of things. First, you can see how much education debt students are reporting that they have. You can see the median amount of debt that students report, and this is all self-reported information. You can also see the amount of pre-medical education debt that they might have, as well as non-education debt. Did they have credit cards? And did they take out other loans after medical school? And the biggest thing that I wanted to draw your attention to is actually how much does it cost to go to school at a public versus a private school, which is at the very bottom of the card. Now, what I wanted to point out is, yes, there is a difference in the cost for the public versus private. You can see that in tuition and fees. And then, of course, you can see that within the cost of attendance. Within your cost of attendance, that's not just tuition and fees. That includes room and board, transportation, miscellaneous expenses, books and supplies, and any other kinds of required costs that the school is requiring of a student. That's all what goes into the cost of attendance. So if we multiply that by 4, because most schools are going to be 4-year programs, you can see that the actual cost could be anywhere between $263 to $358 if you're public versus private. Now, that doesn't necessarily mean that you're going to be borrowing or paying actually that much out of pocket. And the reason I say that is because what I want you to see is that the actual amount of debt that the class of 2021 and 2022 had is different. So as you can see, the total cost, the cost of attendance for public is 263. But as a borrower, the borrower at the public school borrowed about 195. The cost at the private school was about 358, but the amount borrowed was about 220. 220 and 195 isn't that much far apart from each other, right? And that's because many times private schools, although they may look more expensive on paper, it doesn't mean that you're going to pay more. And that's because of sometimes the type of aid that they are able to offer to a student at their school. And I'm going to talk a little bit more about that. I like to show this because I never want students to say, well, I'm not going to go to that school because it's a private school and it's going to cost a lot more than a public school, because that is not always the case across the board. So just be mindful of that. Now, is going to be financial aid available to you, and it can come in the form of grants and scholarships, which a lot of people refer to as free money, or it could and will most likely come to you in the form of loans. And there are multiple kinds of loans: federal, institutional, and private loans. So we're going to talk about these different types of aid first. But I do want to refer you to the fact sheets that are available on our website, such as this one that you see here. What's an aid offer? Some of you might be familiar with an aid offer based upon receiving financial aid from your undergraduate program, because it would be the same type of thing. Now, I always start out by saying, let's look at the scholarships first. You know, a lot of times one of the questions I get is, am I able to get a free ride to medical school? Well, it's not as likely for a medical student to get a full ride like it is in some undergraduate programs. It's just that the medical schools may not have the funding available for that. That's not to say that they aren't out there. There could certainly be some schools that have the funding for that. But there are often other scholarships that you could look into, such as private scholarships, like through a business like Tylenol, or maybe you'll look at them through an organization or an association like the AAMC. We have the Herbert W. Nickens Medical Student Scholarship. The LMSA offers a scholarship. The National Medical Fellowship offers a scholarship. And there are many more, including things like from the government through HRSA, the National Health Service Corps Scholarship Program. So I do encourage you to check out and look into scholarships. You can find scholarship information for medical students within the regular methods that you would search for scholarships as an undergraduate student, which would be your FAFSA and perhaps College Board and those Google searches. But I do caution you, do not spend money to get free money. That always raises a red flag for me. I would encourage you to look for resources from the school's websites, the schools that you're interested in. They may have specific scholarships that students at that school are eligible for or within the community are eligible for. I would also encourage you to use the FIRST website, because if you go to the FIRST website and use that blue toolbar on the right-hand side, that button that says Search First, you can put in a scholarship search and it will pull up all the resources that we have that specifically talk about scholarships, and it can give you some ideas and it can lead you to other resources to review and see if you may qualify for as far as scholarships go. There are some institutional scholarships. You would have to talk to the school to find out if they are offered at each individual school. Sometimes they come with your offer of admission, and other times they come after the offer of admission. You would have to see if there are any specialized scholarships for students. Some can be based upon merit, some can be based upon need. Then there are, like I just mentioned, other scholarship possibilities. And I encourage people to not stop looking for scholarship possibilities even after you get into medical school. You know, this is something on an ongoing basis that you want to investigate, because there could be specific scholarships for you as a third year or a fourth year student that were not available to you as a first year student. The steps for applying for financial aid are pretty much the same as you would expect them to be as applying for financial aid as an undergraduate student. So first, I always tell students to check out the school's financial aid web pages. These are the schools that you are interested in attending. And if you go directly to their web pages, you're going to find out a lot of information. You're going to find out first and foremost, what are the school's deadlines for applying for financial aid at their school. You're going to find out if they have a secondary financial aid application and what that deadline is. While you're there, go ahead and look and see what kind of scholarships they offer. Look and see what kinds of loans and institutional monies they might offer. But while you're there, the biggest thing is to find out what that deadline is for completing the FAFSA. FAFSA stands for free application for federal student aid. And that application can be completed at studentaid.gov. This is where you apply for a federal student loan as an undergraduate student or as a graduate professional student, which is what you will be when you apply for aid as a medical student. There are deadlines to complete your application, and you will want to make sure that you're submitting the information that's needed. Some schools, again, are going to require you to submit additional application or information. Some schools might even require parental information, even though on a federal basis, you are an independent student when you are a graduate professional student. And again, continue looking for those scholarships. Now, one of the questions that I'm often asked is, well, I know I need to fill out the FAFSA form, but when do I fill that out? And that is all going to be dependent upon when you are planning to enter medical school. So if you're planning on entering school next fall of 2023, that means you would be filling out the FAFSA for the 2023-2024 academic year, and that is going to actually use your 2021 tax return. You didn't file taxes in 2021, that's okay. You can indicate on the FAFSA that you didn't file, and you would put down the information as applicable to you. Again, some schools are going to require parental information, and that's because some schools want that information to determine whether or not you qualify for institutional aid at their school. On a federal basis, you are going to be eligible for federal student aid as a graduate professional student while you're in medical school. The two types of loans that you can qualify for as long as you meet federal aid eligibility requirements are going to be the federal direct unsubsidized loan and the federal direct plus loan. Now, many times students may be able to borrow all that they need through the federal direct unsubsidized loan. But sometimes, depending upon how much a borrower had to borrow as an undergraduate student, sometimes there's not enough unsubsidized monies remaining, and therefore the borrower will need to move into a federal direct plus loan as well to supplement what they could not cover through the direct unsubsidized loan. The important thing to note with these programs, with the direct unsubsidized and the direct plus loan, you can borrow up to the school's cost of attendance. So that's why when in the beginning of the presentation, I mentioned what the school's cost of attendance is. That's why it's important to know what that is, because that tells you what you can technically borrow for the school that you're attending. All schools' cost of attendance are going to be different because they can include different things. However, schools are required by regulation to include specific things like the ones that I mentioned: room and board, transportation, miscellaneous expenses, books and supplies. With these loans, the schools are going to determine your eligibility for the loans. With an unsubsidized loan, there is no credit check. So if you will fill out your FAFSA form, you are going to be eligible for the direct unsubsidized loan. That is not necessarily the case for the direct plus loan. With a plus loan, there's actually a credit check. So if you have any derogatory credit history, then you could actually be denied for a direct plus loan. And I should say, if that occurs, then you may need to get an endorser, or what is also known as a cosigner, in order to be approved for the loan. So if you know you have any credit issues right now, you may want to join in on our webinar on Friday so that you can get your credit information and situation in better shape and fix things up, or just strictly understand that that is a requirement in order to be eligible for a direct plus loan. In order to get both of these loans, you have to fill out an application called a master promissory note, and you do have to complete entrance counseling. This is where you indicate that you understand your rights and responsibilities for borrowing the monies, and you also understand that you are required to repay these student loans. You do not have to pay on these loans while you are in medical school, as long as you're enrolled at least half-time. Now, if you leave school for any reason, then you would go into a grace period, and if you're in that grace period longer than 6 months, then you could potentially go into repayment until you return to school. You could postpone payment even on your federal direct unsubsidized and direct plus loan while you're a resident if you choose to. You're going to have options for repayment and for managing your student loan money. So that is a definite positive benefit of borrowing under the direct plus loan and the direct unsubsidized programs. The other big things that I wanted to show you is that the interest rate for these loans is set per academic year. So for the 2022-2023 year, the interest rates are shown here. And the biggest difference is in the origination fee. The origination fee is a fee that is charged to the borrower, but it's not an out-of-pocket expense. It basically comes off of the amount of money that you're requesting before the monies are sent to the school. Once the monies are sent to the school takes what is owed to them for tuition and fees and any expenses that are owed directly to the school. And then after that, they would issue a refund to the borrower. And generally, that's the monies that students are going to use for their living expenses. Now, some schools, as I mentioned, could have institutional loans. And if you are offered an institutional loan, I encourage you to find out as much as you can about the loan. They are not going to be offered by all schools. Some schools just don't have the endowment funds to offer institutional funding. If you are offered an institutional loan, find out what the interest rates are. Find out if those interest rates change on a yearly basis, or are they a fixed interest rate for the life of the loan. Find out how long you have to pay on the loan. Do you have to make payments while you're a resident, or do payments start after residency? And probably one of the most important things is to find out if it's offered to you as an M1 student, as a first-year student. Is it something that's going to be offered to you throughout medical school, or are you going to have to then come up with funding to replace what is not offered to you in subsequent years? That can be very, very important. Now, there are some students that might not be eligible for federal loan funding. And again, if a school does not provide institutional funding, then that particular student might need to look to private loans. Private loans are different than federal loans in many different respects. And again, so different that we wrote a fact sheet about federal versus private loans. The big things that you want to be aware of with federal versus private loans is that the lender of the loan is different. With a federal loan, the lender is the Department of Education. With a private loan, the lender is going to be a bank, a credit union, or an organization that offers this type of loan. You'll want to pay attention to the interest rate. While interest rates may seem a bit higher for federal loans, in this case, the interest rate for a federal loan may look higher and the private loan may look lower, but that doesn't mean that it's always going to be better to borrow the lower interest rate. And the reason for that is because there are borrower benefits with federal loans that may not be available with private loans. And the borrower benefits that I'm talking about are things like loan forgiveness programs, payment plans that are manageable based upon your income. They don't look at your debt amount. And they give you a little bit more flexibility in repayment, whereas some private loans are going to be a bit more strict on how they require you to pay back the loan. Some private loans are going to require that you make payments during residency, where others are not. So find out what your rights and responsibilities would be if you were to borrow a private loan, but truly understand what's going to be required of you as a borrower if you do go that route. There are loans available through the government, through FAFSA, called primary care loans, and these are generally loans that are going to be eligible for third and fourth year medical students. And there are also loans called loans for disadvantaged students. Not all schools participate in these loan programs. They have to qualify in order to be eligible. If they do participate, then they would award these to you as a medical student at their particular school. However, remember when I said check out the school's website? If they are participating in these programs, you will likely see that on their web pages. If you don't see it, there's no problem with asking the financial aid office at the school whether or not they participate in these programs. The benefit of these programs is that they are federal loans. They have really, I want to say, beneficial repayment terms, such as a lower interest rate. It's a fixed interest rate of 5%. They don't require repayment until 12 months after you graduate. And there can be some deferment and forbearance options for them. Now, there are some students that may be DACA students and are not eligible for federal funding. Many times they ask, well, where can I go for other options, for scholarships, for fellowship, or perhaps even for finding other types of loan options? So I wanted to make sure to mention that Immigrants Rising is one of those places that I would encourage you to take a look at if you are a DACA student. And the other place to look is phdreamers.org. And the third place is if you are using MSAR, medical school admissions requirements, you can see within the MSAR which schools are accepting international or DACA students. And you may even be able to then contact the schools to find out if they are offering any type of financial assistance for international or DACA students. So I would encourage you to be aware of that as well. So what other loan facts do you need to know? Well, you need to borrow in the right order. And if you will, the right order to me means the least costly debt first. So that means you need to pay attention to interest rates. And the reason for that is because of the fact that interest is building up on unsubsidized loans while you're in medical school. So what we know is that for the past 3 years, the median amount of debt for medical student graduates has been $200,000. Now, right now, we are in an odd time in which there are what's called the CARES Act and the student loan relief measures, which has put a pause on interest accumulating for students. So that's a good thing, but this is different than normal, right? So what that means is as the normal amount of interest that would normally accumulate for borrowers has not happened for the last 2 years because the CARES Act has been in place since March 13th of 2020. But what that meant for a 2023 graduate, or what that will mean, because we know these relief measures are ending at the end of this year, is that about $6,000 would accrue in interest for a student that's graduating this year. After they graduate, they have 6 months of grace before they have to start paying on their loans. During that 6 months, interest still accrues on their direct unsubsidized loans and if they borrowed any direct plus loans. And so that means about another $5,700 would accrue in interest. At the end of their grace period, this process called capitalization is going to occur. And that means all of that outstanding interest is going to be added to the principal that borrower borrowed. And that means their new principal amount is going to be just about $212,000 moving forward. That also means that new balance is going to accrue interest moving forward while they're in residency. So capitalization is a process that's going to occur when you borrow federal unsubsidized loans. There's really nothing you can do about it unless you have the ability to pay the interest as it accrues, which I have to say, most medical students are not able to work and therefore will not have the funds to pay on the interest as it accumulates. However, if you have a family member that is willing to help pay the interest on your loans, that is certainly something that can be done because you have the right as a federal student loan borrower to make payments on your loans anytime that you want. It's just not something that most medical students are able to do because they're not working while they're in medical school. So just be aware of what this process is, be aware of what capitalization is, and that it's going to occur on your loans. And it's going to occur once you graduate, after you finish your grace period, and then it's going to, or it could happen again while you're in repayment, but it's dependent upon how you manage your student loans. So you'll want to make sure that as you're in medical student, you participate and take part in any type of financial literacy, financial wellness, any kind of financial aid program that's offered by the financial aid office, because they're going to talk to you about managing your student loans and staying aware of what options are, how your loans work, what's going to happen when you graduate is going to be very important for you for wise money management. Speaking of, I'm going to very briefly on a high level go over what repayment would look like. And the reason I do this is because many times I find pre-med students are concerned about will they be able to repay their student loans, because we are talking about, in often cases, borrowing a lot more money than you probably borrowed in the past. So I want to show you on a high level what that could look like. So in this example, let's just say I borrowed $200,000. I'm in a residency program for 3 years. I'm going to start my residency program earning just about $61,000 a year. But after my 3-year residency program, I'm going to earn about $185,000 a year. What does that look like in the term of monthly payments? Well, when I start out, I could potentially choose to postpone payments, which means I wouldn't have a payment. I'd start out making no payments at all during residency. But as you can see, the numbers could be different. They could be as high in this case as $2,300 a month. if I went with a plan called standard. Or maybe I go with an income driven repayment plan where my monthly payments based upon my income, not my debt. So when my income is just about 61,000, my monthly payment is tied to that income. So my payments are around 330. After residency, when my salary jumps up to 185, my monthly payment's going to change in some cases. In forbearance, I was postponing payments in residency, but after residency, I choose a repayment plan. In this example, I chose standard, so my payment goes to $2,700 for 10 years. If I was in standard during residency and I continue with that, it just stays the same for the remaining 7 years. If I'm in an income driven repayment plan like that pay and repay that you see there, yes, my payment's going to go up, but that's because my salary has gone up to 185. Now keep in mind, when my salary is 185, I'm bringing home about $11,000 a month. Am I going to be able to afford that $1,500 to $2,200 a month payment? Likely, you will be able to afford that payment. How long is it going to take you to pay off that monthly payment? Well, that's going to be dependent. Are you going to pay just the minimum monthly payments that you see here? Or are you going to pay extra when you have the money, when you choose to do so? Because again, that's your right. You can pay more anytime that you want. How much will you pay overall? Well, again, that depends. Are you paying that minimum monthly payment? Are you thinking about programs that might help reduce your loan debt in the future? Because that's going to determine how you might choose to manage your loans. There are some income driven repayment plans like Pay and Repay that offer loan forgiveness. So in cases like that, a borrower might choose to make a minimum monthly payment thinking they're going to have some loan forgiveness. There are also programs like the federal program called PSLF, which offers loan forgiveness after a borrower has made 120 payments or 10 years worth of payments. In cases like that, they could have a sizable amount of loans forgiven. In this case, $181,000 to $183,000, and they'd have their loans paid off in 10 years after graduation. You can see that also affects, how much they totally repaid on their student loans as well. So there's a number of ways to manage your debt. There's a number of ways to figure out which repayment plan is going to be best for you. And likely, as you get closer to repayment and graduation as a medical student, either your school will provide you with a presentation about managing your student loans, or you may even hear from me again at that point in time, because lots of times I go in and talk to graduating students about managing their student loans. The bottom line here is that yes, no matter how much you borrow, whether it's $200,000, $50,000, or even $450,000, you are going to be able to manage the debt. It's just that it might take you longer to pay it off, or you might be looking at different programs that might help you pay it off, and you'll manage your loan differently. Speaking of those programs that might be there to help you, there are programs where if you offer service, like National Health Service Corps, where you commit to serving the underserved, they will help repay your student loans for that service commitment. There's also Indian Health Services, do the same kind of commitment service with the tribal communities. Maybe you're interested in research and you work with the NIH. They have a loan repayment assistance program. Maybe you're interested in the military. If you are, they actually have a program where you could use GI Bill benefits, or perhaps if you are going to serve in the military, you could be going to school through the Uniform Health Services program, and they could pay for your education in a return for that commitment to service. If you want more information about these service commitment programs and any other kind of loan repayment assistance program, I encourage you to take a look at the fact sheet, which is that URL that you see at the bottom of this page. Public service loan forgiveness is a program that I mentioned when I showed you the repayment scenario. It's a program in which if you have federal direct loans, like those direct unsubsidized and direct plus loans, if you're making payments for a minimum of 10 years and you're enrolled in an income-driven repayment plan while working for a qualifying nonprofit employer, you could receive forgiveness after you made those 120 payments. And this is a database of programs that doesn't just show loan repayment assistance and loan forgiveness, but there are some scholarship opportunities on here, as well as other types of things that you can look at based upon a state federal designation as well. So I would encourage you to take a look at this. This is a loan repayment forgiveness and scholarship database. Now that was a lot of information, so I'm going to stop there. I hope that this was helpful to you, but we definitely want to make sure that we take time to answer some questions. But I want you to know that you can always email us if we don't answer all of your questions. You can email us at first@aamc.org. And if it's a fee assistance program question, I can certainly get it to Candace. But if it's a financial aid question, I will be happy to answer those questions as well. So I'm going to stop sharing my screen and turn it back over to Kyle.
Okay, thank you. So any and all questions you guys have, please put them in the comments. I will be removing myself from the screen as to not be a distraction. And one that I did want to key up just from the start, though, and Candace, this is for you. When should I apply to the fee assistance program?
Oh, yeah, great question, Kyle. So we encourage applicants to apply to the fee assistance program actually before you're going to study for the MCAT. So when you are embarking on your journey, before you're going to start studying for the MCAT exam is the best time to apply to the fee assistance program, since the MCAT prep products are part of the benefits. You're able to take advantage of those and all the other benefits that's involved in the program. I also want to note that the program, you can have up to 2 years for your benefits. So when you are approved benefits, it expires the following year, December 31st. So if you are approved January, say, of 2023, you have until December 31st of 2024 to utilize your benefits. Okay, so we have another question. It says, how long does it take for an application to be processed and given a decision? So I'm assuming that's also for the fee assistance program. And once we receive your supporting documentation and your completed application, it can take 10 days for your application to get a decision. So our next question is, where can we go to look up institutions that are a part of the public service loan forgiveness, where if we are a resident or working after residency, we can qualify? Julie?
That's an excellent question. So you can go to the PSLF help tool. So it's studentaid.gov/student, or excuse me, studentaid.gov/PSLF. That is if you're a borrower. You can put in the employer's EIN number, which is employer identification number, and you will be able to find out if the employer pops up, they are definitely a qualifying employer. If you're an employer, you can do the same type of thing, but you can also, there's actually information where you can go for employer resources. And if you are a resident or working resident, you can talk to your HR department. Normally, they will know if they are a qualifying employer. They have to be a 501c3 to qualify as a qualifying employer for PSLF.
So the next question we have is, how important is parental income if I am an independent, non-traditional student?
For
Go ahead.
financial aid, for federal financial aid, it does not have any impact. Your parents' income does not have any impact on you receiving federal financial aid. Now, that is not to say that it does not have an impact for any type of institutional aid, because the school could be looking at parental information to determine whether or not, and this is regardless of whether or not this is true, it could be, do you have any support from your family? So that could be that situation. Now, I'm not sure, Candace, that could also be a question towards the fee assistance program. So I'm going to let you address that as well.
Yeah, so in regards to the fee assistance program for parental income is required if you are under age 26. If you do have, if you're estranged from your parents, we do have a process for that. So if you are under 26 and you are estranged from your parents, there is a process for that. You just will send an email to fap@aamc.org and letting them know your situation before you complete your application. So if I am an applicant who is still on a wait list but have not gotten an offer, should I still fill out a FAFSA in case I get an offer? Julie?
That is excellent. I would recommend it. It does not hurt to fill out the FAFSA form. Well, it doesn't physically hurt. Some people say that they don't like to fill it out, but it does not hurt to fill it out. You can list up to 10 schools there. If you have additional schools that you want to add, you can always go back and remove one and add another one. So I would encourage that because the reason for that is sometimes if the financial aid office gets that information, they can get out an aid offer to you quicker if they have that information early on. Sometimes you submit things and they need verification, and that's a process in itself as well.
So the next question we have is, would the FAP waiver apply to preview if you need to retake it for a reapplication? So is two parts to this question. So there is a preview waiver as part of the fee assistance program, and it covers the $100 registration fee. Then also for preview, you're allowed to test once in the testing calendar year. So if you are going to retake preview in the next testing calendar year, you are able to reapply to the fee assistance program and receive those benefits again to be able to apply to the preview exam, but you are testing one time in the calendar year for the preview exam, and that is covered with the fee assistance benefits. Next question we have is there support to help me to get to interviews or with the cost of interviewing?
Unfortunately, there is not. So that is why I highly encourage people to pre-plan. And I know that it may be late in the game for some that are at this point. But if you can do any type of pre-planning and saving for that, that is going to be helpful. If you're not, then I would do things like, if you're looking at going to visit certain schools in certain areas, try to lump them together. Try to use discount points or travel sites that offer discounts. Try to carpool. Try to find, some schools offer some assistance if you do need to come to the school, to where they might be able to have a hosting program where they might have somebody that could allow you to stay with them so that you don't have to pay for a hotel. So check out those options to see if there's any money saving options there through those avenues.
Yeah, I can also share with the fee assistance program. We have had applicants share that they were able to get interview costs covered by the school by letting the school know. So schools do get an indicator with your AMCAS application that lets them know that you are a fee assistance recipient. So I would also encourage you to work with those schools. So if you do receive fee assistance benefits, letting the schools know, because there have been applicants that have shared that they were able to get some assistance from the schools. So it would be reaching out to those schools that you're applying to if you have fee assistance benefits.
Great.
And we're coming up on about time. I've got one more question for you guys. I'm going to throw up on the screen. Thank you so much for taking the time to talk to us today. I really appreciate the information. I'm going to put that question up, get the heck off screen, and let you guys take it away. Thank you.
All right, and our last question is, are there any issues for Canadian applicants either to U.S. or Canadian schools?
I will talk from a financial aid standpoint. Canadian applicants would not be eligible for federal student aid. You could certainly check to see if there's any type of Canadian financial aid that could be used. U.S. schools. That is one possibility. That otherwise it would be a private loan here in the U.S., which means you would likely need a cosigner, and many times that means you need a U.S. cosigner. And as far as the fee assistance program, Candace?
Yes, and there is a component for Canadian applicants for the fee assistance program. It's on our website. It does include a waiver for the MCAT exam, and information for that is on the website.
Thank you for joining, everyone. And again, if you have questions, feel free to email us. You can get a hold of us at first at aamc.org. Have a great day.
Bye, everyone.